What is the position of non-banking, non-performing assets provisions for the banking sector in India? Bank provisions for non-performing assets fall again as credit quality improved in India. The banking sector reported lower bad loan provisioning for the September quarter, led by public sector undertaking banks, along with improved net interest income amid rising credit offtake in the economy. It was the third consecutive quarter of decline in provisioning for non-performing assets and increase in net interest income on a year-on-year basis. For a sample of 29 listed banks, provisioning for non-performing assets fell by 9.7% to 27,442.9 crore, and NII net interest income increased by 21.9% to 1.6 lakh crore, the highest jump in 7 quarters. A year ago quarter, provisioning had dropped by 10.9%, while net interest income grown by 2.4% respectively. Public sector undertaking banks recorded a 12.9% drop, whereas the fall in provisioning of non-PSU banks was limited to 2.9% year-on-year. The share of PSU banks in sample's total bad loan provisioning fell to 66.1% from 68.5% a year ago and 76.4% a quarter ago. Indian incorporates credit quality has been improving. According to a recent report by CARE Rating Agency, the ratio of credit upgrades and downgrades improved to a record 3.5 times in the first 6 months of the financial year 22-23, compared with 2.1 times in the year ago period. A higher ratio indicates improvement in the credit quality. This situation is expected to help banks report better asset quality in the coming quarters. The samples of net interest income increased in the double digit in the September quarter for the third quarter in a row, helped by improving credit cycle. Systematic loan is witnessing a continuous growth, accelerating to around 16% year-on-year in September 22, a 9-year highest. The brokerage added that the recovery was led by continued traction in the retail and SME segment, while the corporate segment also showed a revival due to improved working capital requirements. Non-PSU banks reported a 24.5% year-on-year improvement in net interest income for the September quarter, compared with the 19.8% increase recorded by their PSU counterparts. This is the very good situation for the banking sector in India. It means banking sector in India is performing well with increased net interest income and reduced provisioning for net non-performing assets.